Hi again, everyone. It's Ed, the Finance Guy. Appreciate you tuning in again. Have a really good topic today. I hope people learned from it. It's called reverse mortgages. It seems to be a very, very hot topic. There's a lot of pros, there's a lot of cons. People really don't know everything about it and they just assume things. They hear bad stories about it, so they don't like it. It's like everything. Whenever you deal with any type of a company or a product, or some people love it, some people hate it. But I think it's a pretty good investment for people to have. It's generally done for people that are 62 years old and older. It's on your primary house. Usually it's an FHA loan that was approved. It's a single family home. It could be a 2 or 4 unit home. It could be a condo. But very important, it has to be 62 or older. And the way it works is you have a house, you're retired, you don't have any money. You get a Social Security check and that's it. And you really can't pay your bills. You're having a problem. You don't have money for food. So you want to figure out a way that you can take money from somewhere. But the problem is all your money is tied up in the home. It is an investment that you're using so this way you can leave it to your children. But again, you're 70 years old, you don't have any money, you're not able to travel, you can't afford food. This is really the right way to go to do this type of a mortgage. And you have a lot of choices in this type of mortgage. You're able to borrow up to 40 to 60% of the value of your home. So your home is worth $400,000. You could borrow 160 to 240,000, or you can just take the money as you need it. Or you can have a line of credit. You can say, I want to take $50,000 off the value of the home. Or you can just say, listen, I need $600 a month for the rest of my life. So if you do that, you're going to get a check every month. If you have a mortgage on the house right now, you won't have to make any payments. That'll save you money. If the house is paid in full and you don't have to make any payments except for your taxes, you have to continue to make your real estate taxes. You have to continue to make any HOA payments. Whoever is giving you the money on this reverse mortgage, they're not taking care of any of the expenses to keep your home up. It's something that you have to do. So if you know you have to pay $10,000 in real estate tax, you know you have a food bill every month, cell phone, cable, you know your bills are $3,500 a month, for example, but you only have $2,000 a month coming in, Social Security, maybe $500 from a pension, you're short $1,000 a month, you call up a company, you get a reverse mortgage. That reverse mortgage will send you $1,000 a month, and every month you'll get the money, you'll put it in your account, you'll pay your bills, you'll live great. Now the people, your children, your heirs, of course, are not going to be happy because what you're doing is you're taking away their inheritance. If you live 20 more years, you're going to leave them a lot less money in the house. But in reality, you have to always do what's good for you. If you really don't have the money to pay your bills and you don't want to sell your house, and I have a lot of older people, retirees, they don't want to sell their house because they feel like if they sell their house, their children are going to ask for $50,000, $75,000, and because they have such a good heart, they're going to start giving away their money, and that's really all the money they have in the world. So you don't want to give away everything you have. So will the heirs end up with less? Yes. But the idea about a reverse mortgage is that you have money to live for the remainder of your life. And that's really why I like it. When you pass away, the house will be sold, your heirs will get the house, and they'll pay back that mortgage. So really it works the opposite way. In a normal mortgage, the bank is giving you money to buy a house, you're paying back the bank every month. In a reverse mortgage, it works the reverse. You're getting a check every month from the bank to pay your bills, and that number keeps accumulating with interest so that when you do pass away, the people that inherit the house, they're going to get that much less for the house. So at the closing, when you're not around, the house will be sold, X amount of money is going to go to the people that gave you the reverse mortgage, and the rest will go to your heirs. Most of the people that have equity, they're older, they have maybe money in the bank, they have a small pension, but the majority of the people have, the majority of their equity comes from the house. So the fact that you don't have to make payments anymore, the fact that you're getting a check every month, is going to make your life better. Now, there are a lot of misconceptions about reverse mortgages where your house is going to go in foreclosure, you're giving up equity to the lender. If the house goes up in value, you don't lose that value. Your heirs get that value. So the house is valued at $500,000. you're going to get $800 a month. God forbid you die a year later, you owe $9,600 plus interest, let's say $10,000. So now the house is sold not for $500,000, which it was valued at $500,000. It's sold for $700,000. The people giving you the reverse mortgage just want their money back that they gave you plus interest. So they're not going to take part in that gain. So it's not like you have to give them the house when you die. It doesn't work like that. And there always will be money left for the heirs. So you never have to worry about that either. Also, this loan is called a non-recourse loan. And that means that you never have to make mortgage payments. When you get money from the bank, you're never going to have to pay back more than what the house is actually worth. Generally, they don't lend you 100% value in the home, but let's say they lend you 40% value of the home, but the home dropped 50% in value. So now you owe them $200,000, but the house is worth only $180,000. Because it's a non-recourse loan, you only have to pay back the value of the house. So it's never going to be a situation where your heirs have to come up with money and you have to worry about that. So that's a big consideration. A lot of people are worried about that. What if the house drops in value? My heirs are going to owe money. They're not going to get anything and they're going to owe money. It doesn't work like that. They're not going to owe anything. Again, it's only on a primary residence. So if you happen to have a house in New York or wherever, and you also have a house in Florida, let's say, as long as you live in the house 6 months and 1 day, that's considered your primary residence. So it has to be a primary residence. You have to be living in a house 6 months and a day. You could live anywhere else you want. And you have to continue making tax payments, homeowners insurance, any HOA fees. The title of the home will stay in your name. The title doesn't go to the people lending you the money. There's just a note that shows that you owe them money, and the collateral is the house. But the actual house is never in anyone's name but yours. So a lot of times, there's a lot of phony people out there selling reverse mortgages. You have to be careful who you're dealing with, because they could have you sign papers and have the house transferred to their name. And if you're older and you're not watching and you trust people, you could end up losing your house. And that's a big negative with reverse mortgages, that people said that, oh, I lost my house. The deed wasn't in my name. It was signed over to them. I don't know what happened. And that's a problem. But obviously, when you do something like this, you use a professional, you hire a lawyer, you go to a legitimate company. They're all rated. You can see a bank is usually the best one. If you can go to a bank, you don't have to worry. They're not going to cheat you. But if you go to a private company, you have to be a little bit leery. Make sure you're doing the right thing. So again, you can take out the money. You can make a 5-year payment if you want. You can take tenure. It's called TENURE, where you could take a lifetime annuity, and you could take as much as you want whenever you want, or you can have it the same exact payment every month for X amount of years for your entire life. Or you can just take it as need be. You need 10,000, you need 5,000, you could call them up and take the money. As long as the equity is there, the people lending you the money have absolutely no risk. They're lending you money, they're charging you an interest rate, the house is there, they're only giving you 40% of the value. Chances of the house dropping 50%, 60% is pretty small, so they have a very, very little risk here. It's not like a credit card where you're buying something, you have no collateral, the company has complete risk, but when you have a mortgage, there's no risk. The house is there, I'm going to sell the house, I'm going to get the money back. So this is just a little something on reverse mortgages. I'm certainly no expert when it comes to reverse mortgages. I'm just giving you my thoughts on it. If you're going to go for a reverse mortgage, I don't have anyone. I'm not recommending anybody here, but if you go online, you could find reputable companies, learn about reverse mortgages, sit down with 2 or 3 different people, learn as much as you can before you do anything. Before you sign any document, you show it to an attorney. Don't sign any document. If anyone says sign now, sign right now, you don't do that. You just make sure an attorney sees it and you say, look, I'd like my attorney to review the documents. He'll review it for you. He'll tell you if it's safe to invest, and you don't have to worry about anything. So I hope this helped people. I know a lot of people have questions on reverse mortgages, and to be honest, I reviewed some documents too just to learn about it. It is a little bit complicated. It's something that you have to really study and learn a lot about it before you do it. So I'm happy you tuned in. I really do love doing this. I'm hoping it's helpful. Email me if you have any questions, ed1959@usa.com. I'd be happy to help. Any problems you have, give me a call, 516-205-0722. And remember, stay safe out there. Be smart. Ed the Finance Guy. Have a great day.